I'm Fred McClymans, and on this edition of the Samadhi Partners video brief, we are taking a look at Amazon, their most recent quarterly results, and a little bit of the news activity surrounding them. Joining me today is John Freeman and Gwalen Arnick. Gentlemen.
Fred, how you doing?
What's going on, Fred?
Doing well. Before we begin, I just do want to make the standard disclosure that this is a newsletter. This is for informational and entertainment purposes. We're not making any stock recommendations, nor should any be implied by what we say. So, with that out of the way, gentlemen, Amazon, AMZN, they are a member of the Samadhi Capital Partners client portfolio, A4. The Samadhi 4 in our portfolio. That is our highest conviction category. They had a good quarter coming out here. Pretty much across the board, things looked really good. Fourth quarter sales were up 22% to $43.7 billion for these guys. We like them. Fundamentally, we like them primarily, almost exclusively, as Gwalen would say, because of the AWS model. But I'd like to quickly get your thoughts on their quarterly performance. Was it what you expected? Were there any things that were surprising in their numbers?
I would say I wasn't surprised by anything. I thought AWS results specifically were impressive. The growth was impressive. I believe the AWS was itself was it over 50%? I've got it in front of me here. So I know it was certainly over 40. And they continued to show some operating leverage with that part of the business, which is just, that's just a money making machine. Very much of leveraging that fixed cost base of the infrastructure that they've already built. I didn't see anything, though, to jump up and down about either. I just thought it was a solid, inline quarter. That was sort of my impression in terms of the news flow and so forth. The thing that I keep coming back to, that I keep seeing them doing, is continuing to layer on higher up the stack value-added services on top of just the standard AWS, hey, here's some storage, here's some CPU time kind of infrastructure as a service. So they are going up the stack with databases as a service. DynamoDB is doing well. DynamoDB rather is doing well, and I just see a very sort of an open-ended opportunity for different services that they can layer on that almost have just almost a zero cogs. Because it's all software. Once the infrastructure is done, you layer on a service. It doesn't. You write the software. Then after that, people sign up for it and you print money. That's, so as that grows and becomes a bigger part of Amazon's overall revenue, I just think this thing, people will definitely increasingly take a different look at the business and not see it as there's also the perception thing. And they won't see it as an e-commerce play really as much as sort of a much more a SaaS sort of cloud play that has that operational leverage potential.
Well, after the quarterly results, one thing I kind of walk away from the results thinking is that I hate to be in the same business with this company.
Right.
They are competitively. From a competitive standpoint, they don't play fair in my mind. And that's a good thing. The quarterly result, that's a good thing from an investor perspective.
Yes,
the quarterly results were decent. The AWS business showed pretty substantial growth in the quarter. However, the stock didn't react as positively as we would have liked because of the continued investments that the company is planning over the next year. But what's interesting about those investments is the annual report just came out, and so we had an opportunity to look at a lot of the financial metrics that they only report on an annual basis. What's surprising is that the data center growth has decelerated, and what it looks like is in 2016, Amazon got a lot more aggressive on leasing data centers going forward. Great news for the publicly traded data center REITs, but it's interesting that they're allocating so much money to the e-commerce business in terms of investments. However, in the business that's growing substantially and it's wildly way more profitable than the e-commerce business, they're taking a much more conservative strategy in their investments. Longer term, it makes sense because as they go out and lease these facilities, they're not taking on the significant capex that you would take on in owning them, and they're using that those savings to actually cut the cost on their product offering. So, net, they're staying very aggressive from a pricing standpoint with the AWS business, and that's news for Microsoft out there. But it's interesting. They from a competitive standpoint, they are extremely aggressive. So,
Well, let's take a look here. We talk a bit about, why we're excited about Amazon, and primarily that is, coming out of the AWS model. But if you look at the press announcement here that they made and look at what they highlighted, and pulled out, it's difficult sometimes to really understand just what is Amazon's game. I mean, they announced recently that they're going to create over 100,000 full-time, full benefit jobs over the next 18 months. I mean, clearly a bit of a nod targeted towards Trump and the incoming administration here. But when you look at some of the stats, they delivered more than 2 billion units on behalf of sellers in 2016. They had sellers from over 130 countries. They fulfilled orders to customers in 185 countries. They had over 100,000 sellers in 2016 that had sales of more than $100,000 on Amazon. I mean, that's a big number there. But you start to look at some of the other things. They announced the new Amazon Go with their just walk out shopping, their payment system sort of evolving there. They've recently announced that they're expanding Amazon Prime Video. They're looking to potentially get into competition with the Showtimes and the HBOs of the world on that sense there. They also have some rumored announcements coming out about the new line of Amazon lingerie. The bras and apparel, in that space. And at the same time, getting back to sort of their core, online business, they're really doing a lot to expand their logistics and shipping infrastructure, including not just increasing the number of planes, but they've just now announced a new airport facility that they will be using as a global logistics hub. They've also started offering sort of logistics as a service in the actual ship cargo marketplace as well.
That one I can that one I totally see. That one makes sense because they are one of the core competencies. Then they've sort of been able to develop, as a side result of all the things that they do is logistics.
So here's an interesting question that I'll toss out to both of you here. In these various announcements, when we see Amazon moving into a very broad, if not eclectic, sense of offerings that they're stepping into here, is that really being driven by Amazon management thinking, oh, we want to be number one in this space, how do we get there? Or is it more an issue of Amazon just realizing, look, we've got all this stuff in place, let's start to leverage the infrastructure that we've built into areas where we can generate incremental revenue and get better operating leverage out of our assets that we've already built out?
Yeah. Go ahead, Glenn.
I actually think it's a combination of both.
Yeah.
Right. If you look at the past success of the company, it has allowed them the opportunity to go out and try new things, and quite frankly, fail at a lot of them. But some of them have worked. AWS being the first thing that comes to mind.
Yeah.
You got a business that was started 8-9 years ago, and it's doing $14 billion in top line revenue. There's very few.
Yeah, just about 10 years ago, I think the first services was 2007. I think that's right.
Try to find another company that was able to grow the top line revenue to a $14 billion total in 10 years.
Right. It's true.
So I think that they throw a lot of things at a lot of different areas. They know they can't predict the future, but they know that some of those things will actually work. And
some percentage will.
Right, some percentage will. So you got to give them credit for taking the long-term view on the growth of their company. Sometimes it does seem like world domination, but it's hard to knock a strategy that
So what the one thing I like is it used to be that they threw anything against the wall. to see if it would stick. Same with Google. Now it seems, as is also the case with Google, they have a little bit more of discipline, even though that may not show, but they do actually have an internal process for figuring out what do they throw against the wall, what do they prioritize, what percentage of percentage of money reinvested into the business goes to more sort of long-term moonshot kind of things, and what things are more short-term sort of, hey, this is easy, low-hanging fruit. The things I like, and the things that I like that they focus on, and oppositely when they don't, I like it less. are those with operating leverage potential. So all of the digital download stuff, all the digital books. As they are able to sell things that are made up of ones and zeros rather than things that are made up of atoms that need to be shipped, that's when they do better. Well, so as that, even the e-commerce business should eventually show some operating leverage, operating margin expansion because of a higher percentage of video content, higher percentage of books downloaded, higher percentage of security services done as a SaaS offering for your house, or whatever the next thing that they do. That's the things I'm looking for. The things I'm not so excited about are the really expensive moonshot projects. I suppose the logistics stuff does make sense because that's part of their operations, and as they scale, they can build competitive differentiation and economies of scale, competitive advantage based on economies of scale. But some of the things, I don't know, the device stuff, I don't get as much. I suppose they kind of have to be there to kind of as a defensive play against Google and maybe and obviously Apple, I guess. But I don't see the device side as being as attractive from my perspective as, for example, Amazon Pay. That's low hanging fruit.
Right.
That makes total sense to me.
So let me throw out two examples here.
But you know what? The moonshots at Google are going after much bigger opportunities, and they're much bigger investments.
Right. Oh, right. Oh, yeah, in terms of the absolute amount. Yeah,
right.
That's true.
Right.
That's true.
And so, whereas Amazon's a lot of their investments aren't substantial, right?
Right.
The new bras.
Yeah, that kind of stuff.
They might be getting a better bang for the buck out of what they're
the funny thing is,
investing in.
So we had an interesting discussion about that. Like, for me, I'm looking at this just, okay, like, let's say you just looked at it as some sort of logical person who knows Amazon and the business really super well. Okay, Amazon announces they're getting into this lingerie business. They're going to produce their own bras, their own lingerie. I'm like, what? Like, okay, why would you want to piss off somebody like Victoria's Secret, which is probably a decent-sized third-party seller across Amazon, and all of the other lingerie, sellers, right? And why would you want to emphasize and actually brand as Amazon something that doesn't, that Amazon doesn't really have a sort of a romantic angle to it, okay? Why would you do that? And also, then, it's not the best and most highest margin business. But you know what? We don't know. Amazon knows, because Amazon has more freaking data about this kind of stuff than anybody. So you kind of, I'm almost willing to give them, like, I'll bet you they did an analysis of all of the different kinds of things that they could get into, and they've got more predictive and analytical and personalization software than any e-commerce provider in the world. That's part of their primary competitive advantage. So when they get into this business, you kind of have to wonder, maybe they know something that we don't. You know what I'm saying?
I think what's happening is that they're actually going after or becoming more aggressive with Walmart. And I don't know if, because those announcements are staple items. Those are items that you buy on a repeat. Those are repetitive purchases in a retail establishment like Walmart. It may be that they're looking to accelerate the demise of Walmart and try to go, because Walmart's going to do in excess of $400 billion in revenue in 2016. If they can accelerate the demise of Walmart, then that's a significant opportunity.
Or just take share. They don't have to accelerate the demise.
Well, at
share.
this
But here's
point,
the thing. But I want to get back to that. One of the reasons we like Amazon, and one of the reasons we like Facebook and Google, is that they were, we call them the monsters of data. They own more data, and Amazon owns more data about customers that is actually, transactional and indicates intention. And so they also have been playing with this data for a long time. They have a history of it. So that's kind of what I see is like, maybe they're going to do maybe this is also kind of an experiment here. Like, okay, we did this study for, I don't know, the year or whatever on all the data and all the purchasing, right? And we came up and the answer was lingerie, right? That's the area that we're going to start first to see if if our predictive analytics actually pays off. And if it does, then they can start to select different areas, like a sniper, just one by one, where they have, a high margin, where they can take share easily, and all of these kinds of things. So, although, like I said, initially I was like, okay, that's not an area, I wasn't too excited about this particular initiative. But when I thought about it in the context of all of the data that they're sitting on and all of the analytics that they're sitting on, and the fact that they are smart guys and gals over there, and they probably, figured this out not from hey, we want to get in the lingerie business. I'm almost positive it was driven by a quantitative analysis and it was driven by the numbers.
Right. So to Gwalen's point, though, I mean, that would be a relatively low cost experiment or, a foray into a particular
and they
area.
do that a lot. Amazon does that a lot with all kinds of different things.
Yeah, so now to be fair, though,
they target things and they cordon them off, they seal it off, they say and they kind of have, basically it's test marketing, right?
Right.
And
So-
they have the biggest platform to do it. So why not? Why wouldn't they do it?
To be fair, bras are still a rumor at this point. It's a much touted rumor out there. There are a couple of other things that they have done, though. I mean, their expansion that they've talked about moving into the automotive marketplace. I mean, that's a big opportunity for them. They sell a lot of auto parts, through Amazon.
But they don't have but they are very, that one actually makes more intuitive sense, because here you have the reason Amazon went into books originally was because it is the ultimate long tail. Right, there are millions of book titles, but each one doesn't have that many, doesn't have high inventory. So it's great for an online aggregator. Auto parts are almost exactly the same kind of thing. However, they're playing catch up there. So with auto parts, because there are two very large auto parts and auto auctioneers online place providers, and then so Amazon's from that case, they're just taking share in an area that lends itself to a long tail kind of product distribution. So that one, it makes more intuitive sense to me. Auto parts make intuitive sense. Media, anything that's media, obviously, just like books, makes intuitive sense. And personally, I like the books and the media that they don't actually have to physically ship atoms. They can just ship ones and zeros,
right.
Because at the end of the day, that levers much better. And actually, we've seen over the years when they started to do that originally, their operating margins did improve just on the e-commerce business. Yeah. So it does have an impact, and over time, I think it will have even greater impact.
Let's take a look at a couple of areas, a couple of rumors or areas where they might step into, and then one that they actually are that's purely on the data-oriented side. There is some speculation out there now that calling, voice calling, could potentially be made through the Amazon Echo and Dot products. That would open up sort of a new value-added feature for them on top of the existing hardware. But now extending on that, there have been a few rumors speculating that they may actually leverage the Amazon brand that they're building now in that hardware space to kind of readdress the tablet marketplace, and that's more of the physical inventory, physical hardware, but it would be a natural extension. One thing that they just did launch that I started playing around with yesterday was the new Amazon Chime. That is their video calling unified communications targeted more at the business environment.
Like business Skype, basically.
Yeah, right, business Skype. So what I found actually kind of interesting about it.
All those kinds of guys, right?
Yeah. So their approach here is not just to take everybody that has an Amazon account and say, look, here's this new, calling service. It actually, there is a monetized, aspect to this. There is a fee that you pay, monthly moving forward for it. And I think probably most telling, when you register, This is all for them about scheduling and about data. And what data are they looking for? They're looking for your business email address. When you register, it's very clear. Sign up with the address that you use to manage your calendar. And our system will integrate in with your calendar. So that gives them access to a whole new set of business
and that
addresses.
goes right back to Echo, because with Echo, like, you want to be able to just say, hey, Echo, hey, Alexa, schedule me, a meeting at 2:00 next Wednesday or something like that. I mean, that, to me, I think Alexa does have a tremendous home advantage, but it definitely also has a
Yes.
real strong business application too. What I like about Alexa, I forgot about that. I mean, they're probably learning more about cognitive, for lack of, I won't use the word AI, but, increasingly cognified software. That is software that can not just run simple algorithms, but can actually, make autonomous decisions based on a very wide, very large number of variables. And how do you get good at that? You get good at that by practicing over
Right.
and over and over again, and listening and listening. And so this thing is in your house, recording everything, responding to your questions, and it all goes, and every single one of them goes back to a server at Amazon and feeds that. And it feeds and hopefully improves the cognitive ability of their software. Man, there's so many open-ended applications for that. That's the honeypot
Yeah.
at the end of the rainbow for
What
a
are the
lot of these
points
guys.
that,
And I think Amazon actually has kind of stepped in front of Apple Siri and Cortana and all these other guys, because they are listening all the time. That was the brilliant part about it.
So now you can, and that's where I was going to go with that, is sort of that comparison with Siri, because in some of the things that we've written about in the past, particularly about Apple, there are people who are very bullish on the Siri capability and the fact that, look, every Apple device is a Siri device. But while you can turn, Hello Siri on, your phone to have it listen all the time, I don't know too many people that do. And there's a difference between, between asking your phone, asking Siri for a particular task that you want achieved versus the very diverse environment that Echo and Dot now exist in. When it's in your home, it gets a whole new level of data, and it can learn so much.
It's a lot more diverse, and it also has intentionality, because you're purchasing stuff with Alexa. You're asking Alexa questions you don't ask Siri. I mean, Siri, it was very, very impressive, but the problem with it is people just use it to ask sort of open-ended queries about, who won the Oscars in 1996 or something. They tend not to ask it things that show intention. And and that actually have an output, like
things that lead to a transaction.
Yeah, exactly. And so that and also Siri doesn't listen to you all the time. It only listens to you when you ask it a question. Alexa apparently has turned on all the time, so it gets better and better at voice recognition. Is now actually apparently a little better than Siri, under 5% certainly. I think both of them probably are now in terms of voice recognition, and that comes from being able to understand dialects and mood and when you're mad and all that kind of stuff. And you throw emotion in there, man, they're gonna have a powerful set of data and intellectual property, frankly.
Right. So,
anyway.
So wrapping up on Amazon, Gwalen, any final thoughts on what you see as the challenges for Amazon moving forward over the next 4 quarters?
Well, from a business fundamental standpoint, I think that everything will continue to work. If anything, they're messaging to the investment community on what their projected investments are over the near term. AWS business is the reason we own the stock, and there's been very little over the last 3 earnings releases that would contradict the thesis.
Yeah, and it's interesting. I'll throw in one of the kind of a funny thing that, I mean, it's one of those the CEO doth speak too much, situations where heard from Oracle was saying that Amazon's infrastructure is old and ours is fresh. When Oracle hasn't. I mean, you can just look at the financials. Like Oracle hasn't spent very much money on their infrastructure at all. And I mean, to compare themselves to Amazon is absurd. Amazon does many, like, it's over an order of magnitude more, cloud business than Oracle does. I mean, it's just kind of funny to watch Oracle try to deal with the new world.
The new world order here in technology.
I just thought that was kind of interesting that they thought that they had to throw some jabs at Amazon at this point in order to kind of promote their own business. But I mean, I think Oracle's customer base is a lot of what Amazon is going to take with AWS and with the layered services like load balancing and security and DynamoDB and all of that stuff.
I mean, they've already taken it in some instances. So
yeah, that's right. So,
very good. Well, gentlemen, I want to remind everybody that Amazon is a member of the Samadhi 4, our highest conviction category in the Samadhi Capital Partners client portfolio. I would invite our listeners to subscribe for our email updates at samadhipartners.com. As well as follow us on Seeking Alpha at seekingalpha.com/author/Samadhi-partners. And with that, this edition of the Samadhi Video Brief Newsletter is a wrap. Gentlemen, thank you.